Hello, good day, everybody. This is Julio Dalla Costa, Director of Technical Accounting at Bramisol. Today, we are continuing with our accounting advisory hot tips, and we're still into talking about ASC 842, the new lease accounting standard. Today, we're going to talk about the incremental borrowing rate, or as it's called in industry, the IBR. Today, we're going to talk about what is the IBR and how is it applied in practice. This is a very key part of the adoption of ASC 842 because what happens is, as part of your adoption of your lease accounting, you have to apply an incremental borrowing rate in order to do the present value calculations for your lease portfolio. And there are certain nuances that's very important for you to take note of. First of all, what is the IBR? Well, one of the most significant challenges for lessees is applying 842 is to determine the incremental borrowing rate. So under ASC 842, there actually is very little authoritative guidance regarding how a lessee should go about estimating this rate. However, working with the big four accounting firms and talking with the FASB, I believe that there is some pretty secure guidance on what is the IBR and when to use it. So for a lessee, the discount rate for the lease is always the rate implicit in the lease, unless the rate cannot be readily determined. What does that mean? That means that when a lessor lesses you a piece of equipment or a vehicle or what have you, they will know what is their incremental borrowing rate, or they will know the rate implicit in that lease. You as the lessee, though, you just get a schedule of payments. So you really don't know what is that rate implicit in the lease. So if you don't have the rate implicit in the lease, you have to now default to your incremental borrowing rate. So in that case, the lessee is required to use the incremental borrowing rate of the organization when measuring the initial lease liability. So again, just to recap, if you know the rate implicit in your lease agreement, you always go to that use. That's the one you're using. If you don't have the rate implicit, then you'll have to default to the incremental borrowing rate. So, as defined by the FASB, the lessee's incremental borrowing rate is the rate of interest that the lessee would have to pay to borrow on a collateralized basis, very important, collateralized, over a similar term and an amount equal to the lease payments in a similar economic environment. So I want you to take away three main points here. The first one is collateralized. So a lot of companies, they started out with this discussion saying, can I use my weighted average cost of capital? And the answer is no. So many companies have their weighted average cost of capital as their borrowing rate. What would be the rate? And it sounds logical to use that, but here's why the FASB discourages the use of using your weighted average cost of capital. The first thing it has to be collateralized. So if I go to the bank and I want to borrow $10,000 to buy a vehicle, then the collateral is that vehicle. So it has to be a collateralized rate. There must be a collateral component of that borrowing rate. The second one is very important because you may have a 3-year term for a computer versus a 30-year building lease. The FASB recognizes that and advises that you cannot use the same rate for a 30-year lease as it is for a 3-year computer lease. Very important. Lastly, it has to be a similar economic environment. What does that mean? That means that you have a North America economic environment, US, Canada, Great Britain, and Europe as well. But then you also have other economies like Latin American economies, Argentina, maybe China, maybe Asia, where there's a little more instability, you have higher inflation. So therefore, what the FASB is saying is that the economic environment has to be the same. So therefore, if I have a 30-year building in Chicago The IBR, in theory, should be different than if I have a 30-year lease building in Argentina. So those three are very important as you go to apply the IBR. Just to recap, it's a collateralized rate, it has to be a similar term, and has to be a similar economic environment. I hope that was helpful as we discussed the IBR under the new ASC 842 lease accounting standard. Thank you very much and have a great day.